Hi and welcome to another edition of Weekly Market Report by tradersclub.co.uk. This report is covering week beginning 13th of January. As per usual, let's start with our disclaimer, if we can find it, and just expressing our opinion here. Anything that we discuss here, it's available in a public domain, therefore it should not be seen as an advice for your trading or your investment. We are simply sharing the information for the benefit of the club members. I will try and keep this report fairly short. We have quite a lot of charts to go through today, but let's keep it nice and short and sweet. First chart is the chart of S&P on a daily time frame. We are obviously seeing market pushing higher, attempting to go above 1474 previous high. In this upward channeling trading range. Daily time frame appears to be forming inverse head and shoulder pattern, and the price projection based on this pattern would target 1500, 1530, 1550 levels, depending on how conservative we wish to be. If we take the distance of the shoulders to the neckline, or if we have the distance from the top of the head to the neckline and add it on a breakout level, we would potentially target those levels. It would be healthy for this index to pull a little bit lower to retest that neckline around 1440 and confirm that newly formed support before it spikes higher. It will enable loads of people to open up positions at the better levels. However, there's probably quite a lot of orders above these levels, i.e. 1474, and some people might be picking the top, may be willing to short, other people might be willing to go long above these levels as well. So the possibility of a spike, intraday spike higher, and quite explosive price action, only to be possibly reversed, and a significant corrective action to follow after that it's quite possible as well. It would almost create like a short squeeze and pick everybody's tops above here as well. So indicators are extended. I'm looking at both options. Prevailing trend is currently bullish, but I would like to see a pullback in order for me to get in at a better level, I suppose. This is S&P 60-minute time frame. And we can see that price is moving higher. However, the candles are getting smaller and bulls are getting tired, I suppose. Current support on the downside, it's at 1466, followed by 1462, and then 1448. Only the loss of these would potentially target 1440 level, which is very close to that neckline level as well that we were referring to as well. 15-minute time frame, it's a really short-term intraday level as well. We can see that that's creating higher highs and higher lows. We have to respect that. However, the recent price action for the last couple of days is actually creating this ascending triangle or a pennant type formation. It's not clear exactly just yet what it is. If we see a breakout and a daily close or close above this 1474 levels, that'll kind of a call for that higher prices to come, and indication of inverse head and shoulder pattern playing out. Alternatively, if you see a bit of a pullback, especially based on these kind of fib levels, so 1469 would be a nice level, 1470 would be a nice support level, followed by 1468 because it's a 50 period moving average, and then 1467 previous low, rising trend line. Also, any of these fib levels, 1464, 1462, 1459 would be very much acceptable support levels as well. The price of FTSE 100 index, it's very, very bullish. we saw a breakout higher again this week. The Friday closed quite high. In order for us to see the next logical resistance level or a potential projected target price, we would really need to change this into a weekly time frame, and in that case we are looking at 6377 level, which is quite high up. In a case if we see a bit of a pullback and consolidation of some sort, these levels of 6,100, 6050 would be acceptable support levels, followed by 5992 or 6,000, which would be a nice round number, also 20 period moving average on a daily time frame, followed by 5932 level, which is the cluster of this previous highs as well, or a triple top or triple head as it was as well. RSI, MACD, and stochastics are at the overbought level, so they're quite high up and the price is quite extended. Volatility index dropped lower quite significantly, currently retesting this 1336 level, which is a really significant low here. Anything lower than this would be quite concerning for VIX. Stochastics is oversold and curling up, potentially asking for a spike higher, which would call for a sell-off in S&P and other indices as well. This is indicating a significant amount of complacency in the market, so nobody's pricing in any risk. Everybody's quite happy, and that it's usually a red flag or a level to watch. So the levels that I would be watching for volatility index on the way up would be 1366, 1367 level as a resistance, followed by 1477, followed by 15. Which would be a retest of this previous support, now newly formed resistance, and in that case S&P could quite likely sell off as well. Copper, it's creating a continuous price consolidation within this long-term triangle range, and on a daily time frame we're actually seeing a creation of additional consolidation pattern within that triangle as well. The price is currently supported by 20 period moving average at 365, followed by 359 and 356. Only the spike higher above 372 and especially 375, and if we see a daily close above this level, which is this falling resistance trend line, could call for 3.82 or maybe even 4. In that case, we would see a rally in S&P as well. Daily price of gold. This looks like a bullish flag, and it appears to be creating A, B, C, D pattern. We are waiting for a breakout on E. This level here appears to be a double bottom, but we need to wait for this pattern to play out. So only the spike higher and a daily close above this 1720 level could confirm this pattern as well, but this is quite bullish as well. Also, it looks like there is a potentially a creation of a channeling trading range on a daily time frame as well within this flag as well. So the resistance on the upside that I'm watching for is 1695, followed by 1698 and especially 1720. In that case, it would confirm A, B, C, D, E breakout. Alternatively, support on the downside, it's here 200 period moving average clearly indicated at 1664, followed by 1636 and 1626, 1630 levels. The loss of those would be quite concerning for me. This is the daily chart for NYMEX oil. Falling resistance trend line. It's clearly stated there in a dotted blue line. Price action is retesting it at the moment. It's proving to be quite a lot of resistance at the moment. Stochastics is at the overbought levels, and MACD as well. RSI is moving into that level as well. So the support on the downside should be around these levels, 93, 92, 91.45, 90.87 before we move any lower. Alternatively, the breakout higher above this 94.70 level, and especially 95.59, which is the upper Bollinger Band, and a daily close above these levels, could be seen as very bullish for oil, and in that case we could potentially target 100 as a next resistance level. This is the chart of dollar index, US dollar index. We could see quite a bit of softening and a pullback in the price. The price action retested the psychological 80 level at the end of the last week, and then we confirmed the resistance of 200 period moving average at 80.87, and then especially the price action on Friday, it's kind of this fairly big inverse hammer or a shooting star. It's quite bearish. So the resistance on the upside in this case is located here at 80.21, which is 50 period moving average, followed by 80.58, which is upper Bollinger Band, followed by 80.85, which is 200 period moving average on a daily time frame. Support on the downside, it's at these kind of levels here, 98, 93, 78, 93, 79, 01, and then obviously 78, 60. But in that case, we would see that the loss of this rising support trend line as well. The actual report would have the table of resistance and support levels for major currency pairs as well, including dollar index, cable, dollar yen, and the others. So please feel free to check that out. Hopefully this was informative, and hopefully I'll talk to you soon. Thanks. Bye.